Just walk me through what we actually learned today from the BOE.
Well, this was the first time in the 4 years of the stress tests that all of the UK banks actually passed. But this kind of day of jubilation was ruined by the fact the Bank of England is asking banks to boost their capital buffers in anticipation of a potentially disruptive, disorderly Brexit as we move through the negotiation period. So really what should have been a positive day for banks and their share prices actually look quite negative in retrospect.
Stephen, we've spent a lot of time over the last year or so talking about the counter-cyclical capital buffer in the UK. Walk me through what that actually is and what the governor can do with it.
Well, it's basically a tool that the Bank of England uses to force banks to build up higher reserves when times are good, when lending demand is high, and then allows them to release this when times get a bit worse, and they usually would cut lending. So this essentially is the Bank of England forcing banks to stockpile more money in order to lend should there be a downturn after Brexit. Now they've increased it to 1% now. Which is a 0.5% increase today, which is another £6 billion of capital. And they've signalled they'll do another 0.5% increase in the next 6 months of next year.
Stephen, would this lead to a material tightening in the UK in terms of lending, given that we've just seen the first bank rate hike in a decade from the Bank of England? Could we see things tighten up over the next several months?
What the Bank of England warned about today was kind of like a triple hit on the banks. You have a disorderly Brexit, you also have an economic crisis, and you have about £40 billion more in misconduct costs. So under those circumstances, they do say that there will be a tightening in lending. But if you just take one of those three things alone, the Bank of England has actually said it thinks the system will be okay. They're running bank capital about 4 times higher than they were before the financial crisis, which is, of course, having an effect on their profitability, but it should make them more stable and not the cause of the problem as they were a decade ago.